Okay. And next, I'm particularly excited because this is my final moderating session, is the CEO, Sam Ash, CEO of Bunker Hill. Best for last. There we go.
Thanks, Elian.
All right. Okay, great. Well, thanks again for joining. Maybe we should start just with an overview of the company and your main asset and what you've been up to.
Absolutely. So the Bunker Hill Mining Company is a single asset company, and we're in development. And we're going to be bringing the Bunker Hill mine into production in Q1 of 2025. And it's really it's an iconic, historic mining asset in the United States. It operated continuously for over 100 years. And in that period of time produced over 5 million tons of base metal in the form of lead and zinc and 165 million ounces of silver. And in a lot of ways, it's the most dominant mineralization in the Silver Valley historically.
And you know, it's got a lot of history, as you say. It's got let's say a reputation for being difficult as a restart. You and your executive chairman and your CFO have really impressive pedigree. Maybe we should talk about the management team and how they took on this challenge, and then we can go from there.
Absolutely. So Richard Williams, our executive chairman, and myself both before this worked for Barrick. And I was running the Lumwana copper mine in Africa for about 5 years, a pretty significant turnaround. And then as the Rand-Gold merger came to pass, I went to business school at London Business School. Richard was sitting on a couple of boards and doing some consulting. We stayed in contact through that period of time, and we were talking about the opportunity to do something more entrepreneurial in the mining space. And we were really looking for an opportunity to take a unloved, challenging asset and really build a company around it. So when we were looking for opportunities, we were looking for assets. We were looking for, number one, a mineral endowment that that could be multi-decade in life. We were looking for a mineral endowment that could weather the full commodity cycle. And we were looking for an asset that was in what's recognized typically as a relatively safe jurisdiction, although we both had a lot of experience working overseas in some exciting and challenging places. Starting a new company is a challenge in itself.
Yeah.
The interesting thing is that what I just described is assets that are usually in production by mid-tier, if not major mining companies. So we also knew that we were looking for a distressed asset. And that's really what we found at Bunker Hill. When we looked at the opportunity at Bunker Hill, it was most certainly distressed. The environmental legacy, spending 40 years in a EPA Superfund site, from a ownership perspective, the Bunker Hill Mining Company at the time didn't own the asset, had a lease with an option to purchase, and had some real challenges associated with it. So it was an opportunity where we saw that there was absolutely the mineral potential, and it was an opportunity that our skill set as mine builders and operators, that it was the right fit for us, and the skill set that we brought to the table, we could see a pathway to advance the project.
Excellent. And we'll get into where you are now in that journey. Of course, to embark on that journey required some money, a fair amount of money, I suppose, and you were able to attract a financing partner. So maybe let's discuss that and how that partnership came together.
Yeah, absolutely. So when we joined the company, it was essentially a dormant company. Treasury was empty. Again, we didn't own the asset. It had a lease with an option to purchase that needed to be renegotiated. And there was, as well, outstanding water treatment payments due to the Environmental Protection Agency. But there was really no doubt about the mineral potential and the mineral in the ground. When the mine went into closure, there was 14 million tons in SEC-compliant reserves, and it had a tremendous operating life. So when we started, we raised a little bit of money in the public markets, and that was really focused on doing the technical work to advance the mine, on a solid technical footing, which was focused on getting a 43-101 compliant reserve in place, based on and using the historical reserve as a pathway to get that reserve into place. And when we were able to do that, we were looking for financing opportunities to take the next steps through development, and we found a phenomenal financing partner in Sprott Royalty and Streaming. And they saw the potential as well, and were willing to provide the initial round of financing at a PEA level, which allowed us to acquire the mine and advance the technical work towards pre-feasibility. And then at that point, advanced further funding in the form of a stream that's allowed us to move the project forward into execution and construction.
Right. So exactly. So that that journey of going from distressed asset financing, you're now into seeing the end of the tunnel and getting this mine back up into production.
Absolutely. At site this week, we're pouring foundations for the mill, so we're pouring about 1,200 yards of concrete right now at site.
Okay. And from there, what are some timelines people should be looking out for?
Yeah, we'll begin. We'll begin mining ore towards the end of the year. At the moment now, what's really interesting is the amount of existing in-place infrastructure we've been able to leverage. So the capital development for the first 3 to 5 years of the mine life is complete, and we have access to the ore body. We are doing definition, but also resource expansion drilling, and working on taking the first steps to convert the 7 million tons of inferred material in our mineral inventory into measured and indicated material. So that resource statement, and we'll be releasing drill results through the summer, and looking to have an updated resource and reserve early in 2025. We'll resume mining operations and begin building a stockpile in front of the mill through the fourth quarter. And we'll be looking to commission the mill and ship our first concentrate in Q1 of next year.
Okay, wow, congratulations.
Thank you.
So one of the things we've seen recently is, other project developers, project builders who also during this last cycle had to partner with royalty, streaming, private equity groups, because these have been some of the most prolific financiers of our industry over the last few years. Recently have embarked on refinancing those instruments or financing. As an example, we saw New Gold recently buy down teachers down below their initial investment when they bought into that deal, or we saw IAMGOLD recently raise money to take Sumitomo down. What are your plans in terms of refinancing the Sprott facilities?
Absolutely. So we are in the process right now of actually beginning and executing on a refinancing. And what's really interesting is that in the the royalty and streaming space, there are mechanisms, and most royalty companies and streaming companies, Sprott as well, realize that providing early funding comes with a higher cost of capital, but shouldn't necessarily tie the asset's hands either. There should be a mechanism to, over time, reduce that cost of capital, which is what we're doing right now. And over the next month or two, you will be delivering on and beginning that process of refinancing.
Excellent. Okay, good. One of the things I think that is worth just highlighting is you alluded to it as the distress situation, the cleanup of the site, and how you embarked on that journey and have taken responsibility as a company to deal with that legacy. And I think that really is a great ESG story. And I think I'd like to just give you an opportunity to talk about that.
Absolutely. So, the Bunker Hill mine site, when it went into closure, the primary it went into closure not related really to anything at the mine at that time. It was related primarily to the environmental performance of the associated lead and zinc smelter. But when the mine went into closure, over time there developed a acid mine drainage challenge. So being completely open and honest, there's 1,500 gallons a minute that comes out of the mine every day, and it has a pH of about 2 to 2.5, and looks very similar to a milkshake. So it's most definitely a water quality challenge.
Right.
And that water reports to a water treatment facility that's owned by the Environmental Protection Agency. It's operated by the Idaho Department of Environmental Quality. And the commitment that we took on when we came in and we acquired the site is that we are not only going to pay for that service on a go-forward basis, but we are going to pay for the last 20 years of historic water treatment payments that the previous owner wasn't able to make. And so that in itself is a very large commitment. And it was probably the key issue as we were going through and arriving at site and advancing the project that that we focused on from an ESG perspective. So it's really we take a lot of pleasure from the fact that we're coming into a mining opportunity where not only is there a bright future economically for the mine, but at the same time you're able to address what's most definitely a negative historical environmental impact. And beyond that, the social impact in the community as well.
Well, congratulations. I'm sure that'll be a case study in due course. And so maybe finally with the last 90 seconds or so, obviously getting the mine back into production is priority, but what about some blue sky, exploration and growth and M&A? Maybe just shed some light on that.
Absolutely. So right from day one, we saw Bunker Hill as the cornerstone asset of what we're building, which is going to be a multi-asset mid-tier mining company. So we're certainly have an eye towards growth, but as you said, delivering Bunker Hill is the first priority. As we move into production, even at the Bunker Hill facility, there's a tremendous amount of value to unlock. So we're starting at 1,800 tons a day. But we already have scoping level studies underway to take that to 2,500 tons a day, and that's just within the historic mine footprint. Which is only about a third of our entire claim package, and our claim package is fully patented mining claims on 100% private land, and some early indications from some geophysical studies that we've done is that the potential for mineralization at least as extensive as what we're seeing in the existing mine could exist. And so we're really excited about advancing those opportunities as well.
Great. Well, we'll be watching. Thank you again for your time and best of luck.
Thank you.
Thank you.